Research at City, Markets Edition.
Welcome to Research at City, Markets Edition, where we break down global macro in under 10 minutes. I'm your host, Elise Badoy, Head of Equity Research for Europe, UK, the Middle East and Africa at Citi. And today we're inverting the roles. I will be interviewing the usual host of this podcast, Beata Manthey, who is Citi's Head of European Equity Strategy. When cyclical pickup meets fiscal tailwinds, we have just released our outlook for 2026. And each year, Citi equity analysts come together at this time of the year with our macroeconomists and strategists to marry top down and bottom up expertise and produce our views for the year ahead. So stay tuned as we record from London and dive into fiscal revival, AI broadening, and of course, geopolitics.
Great to be here, Elise, in these swapped roles and to discuss the very crucial topics for the next year.
So let's get right into it. Your team at Citi, together with the analysts and the economists, have published essentially what is a constructive outlook on European equities for 2026. So give us, to begin with, the high-level view, starting with the economic outlook.
Absolutely, Elise. So the macro environment is indeed becoming more favorable. On the fiscal front, we project a more supportive stance across most major euro area countries for next year, maybe with the notable exception of France. A significant factor here is the acceleration of NGU, the next generation EU spending. In periphery countries like Italy and Spain, this could generate a fiscal impulse close to 0.5 percentage point of GDP. And of course, fiscal easing in Germany is even bigger and expected to see a GDP boost of almost 1 percentage point. That's a pretty good backdrop for equities. Next year, we are going to see effects of fiscal easing together with the lagged effect of monetary easing. And all this means that our economists have lifted their Eurozone GDP forecast for next year, and now they expect growth of 1.2%, which is in line with potential growth and actually above the consensus right now.
So obviously, Beata, this is only the domestic macro story. What about the broader international backdrop? Obviously, we're recording this week. We've just heard from the Fed. What do you make out of this week's decision, and how does this impact your views?
So we've been arguing for quite some time that Fed cutting into soft or actually perhaps even no landing underpins this super favorable backdrop for equities. This is the type of environment where all regional equity indices go up, with some skew for more cyclical ones to do even better than the rest. So what we've heard from the Fed this week is they will cut again, growth is resilient, maybe even better than what they forecast beforehand, and actually inflation is mostly under control. What's not to like, Elise?
Okay, that's a very clear picture of the macro tailwinds. But with this supportive backdrop, your team at Citi is also quite constructive, again, for specifically for European equities. Can you give us the high-level view and perhaps hint at where you see the stock 600 heading by then?
Indeed. With that backdrop, our view on European equities is constructed and frankly is becoming more structural in nature, which is very important. We've introduced our end 2026 stock 600 target of 640. That implies a solid 10% upside from the current levels, assuming multiples remain relatively stable around today's 12 months forward PE of 15 times. We also see good potential for FTSE 100. We target 10,700 for roughly similar upside. And this positive stance is built on the combination of factors, including the cyclical improvements we've just discussed, combined with the structural and fiscal shifts that we see ongoing.
So obviously, we now finally have what sounds like a generally very positive environment. But let's talk briefly about the themes that should shape and drive equities going forward. You've written about a few, but which one is the most important?
Elise, by far the most important for us is EPS recovery, and what comes with it, EPS broadening. Broadening is the key word for next year. So let me explain this. this year, European equities have faced large earnings downgrades, larger actually than major peers around the world. And the downgrades were driven by internationally exposed stocks, primarily due to factors like tariffs and currency strength, so euro dollar strength. However, these headwinds are now easing considerably, setting the stage for significant earnings inflection into the next year. After what we expect to be a relatively flat 2025, bottom-up analysts are projecting a robust 11% EPS growth for European equities next year, with wide set of sectors contributing. That's the broadening. Our own top-down forecast also implies very healthy 8% EPS growth, which is still a very robust number.
All very encouraging, Beata. And obviously, at the beginning of this podcast, and our listeners are staying tuned, I had mentioned fiscal revival and AI broadening. Do you want to tell us about these themes?
Absolutely. So we've touched already very briefly on this fiscal revival, talking about fiscal policy and macro backdrop. But what is worth mentioning and emphasizing? Investors around the world remain quite skeptical on Europe's ability to deliver on this stepped up fiscal spend. Now, our view is more sanguine. We think that the fiscal is happening. It's already started to be evident in the data, in the positive data flow. It should result in the better GDP growth, better EPS, and justify higher valuations. We also argue that this potential growth has not yet fully been priced in by the markets, so playing this theme in the new year should be a good investment opportunity. This is also a very good place to mention another theme, AI broadening. While the AI trade has seen some recent volatility, we think that the underlying thematic will remain one of key drivers for global equities going forward. But we expect this AI trade to broaden further, moving beyond just the initial hardware and software giants to more focus on adaptation and integration, which really makes Europe a very interesting crossroads, particularly with its potential for domestic infrastructure spending complementing AI advancement. So we argue that it's really a crossroads between AI and fiscal, and that's where you can play it in Europe.
So we've covered macro, the Fed, we've covered earnings and fiscal revival, AI broadening, but really we haven't mentioned geopolitics at all. So we really need to look into the ceasefire hopes reemerge again for the next year. How could that impact the European economic landscape and your outlook, Beata?
That's an excellent point, Elise. And it could be a significant upside catalyst. A ceasefire, particularly one that leads to lower energy costs, would essentially act as a hidden stimulus for Europe on the top of the evident ones that we already have. Even without the ceasefire, we expect global LNG supplies to start exceeding the demand from next year onwards, and most of this excess supply should be flowing into Europe. But a ceasefire would accelerate and amplify this trade, providing a substantial relief both to the European economy, but also the manufacturing base and sectors that are more energy heavy.
Beata, that's a very clear picture of the macro and thematic drivers in Europe. How does it feed into the global context of equity investing?
So, Elise, we are facing the type of environment, we've briefly touched upon it already, where it's going to be really favorable for broad set of sectors and regions with preference for more cyclical parts of the market. And the way we frame it for the investors from global equity allocation perspective is we continue to be overweight AI, but argue you should have a diversified portfolio. This means that the US is neutral, even though we are overweight AI, and we argue for the broadening of the AI theme to be overweight emerging markets and for this cyclical uptick to be overweight continental Europe.
Thanks, Beata. We've spoken about the many positive aspects of the outlook for the next year, and you are very good at always having balancing views. So, what are the risks that investors or market participants, or indeed our listeners today, should be aware of?
we've left the worst for last, Elise, but we cannot record this podcast without speaking about the risks. And we could talk about many, but what I would narrow it to this one. Broader market volatility could remain elevated, even if it is amid continued reassessment of the AI thematic that we've been hearing recently, combined with this really demanding and high valuations. For us, high valuations could cap upside if EPS doesn't deliver. That's my biggest risk. These are markets priced for delivery, if not for over delivery.
Thank you so much for breaking down Citi's comprehensive outlook for European equities in 2026, Beata. This has been really incredibly insightful. This is the last episode of Citi's Markets Edition podcast for this year. We'd like to take this opportunity to wish you all happy holidays and a prosperous new year. Thank you for joining us today. This episode was recorded on December 12th, 2025, and I'm your host, Elise Badoy. Our next Research at Citi Markets Edition podcast will be hosted by Doug Villa, Citi's Global Head of Macro. Thanks for tuning in, and goodbye for now.
This podcast contains thematic content and is not intended to be investment research, nor does it constitute financial, economic, legal, tax, or accounting advice. This podcast is provided for information purposes only and does not constitute an offer or solicitation to purchase or sell any financial instruments. The contents of this podcast are not based on your individual circumstances and should not be relied upon as an assessment of suitability for you of a particular product, security, or transaction. The information in this podcast is based on generally available information, and although obtained from sources believed by Citi to be reliable, its accuracy and completeness are not guaranteed. Past performance is not a guarantee or indication of future results. This podcast may not be copied or distributed in whole or in part without the express written consent of Citi. Copyrights 2025 Citigroup Global Markets, Inc. Member SIPC. All rights reserved. Citi and Citi and Arc Design are trademarks and service marks of Citigroup Inc. or its affiliates and are used and registered throughout the world.